Hi guys, this is Mark Shawson, the Pattern Trader. Welcome to this third day of the 4 days of my live webinar series. I'll get started in just a moment, but in the meantime, please put your name and where you're from in the question box. So I expect there will be several hundred people here, so I'm not going to give an individual shout out, but thanks a ton for showing up. And we'll kind of go through what's going on here. So Graham says, I'm up 50% since Tuesday, even with KTOS hitting the sell stop. Yeah, so I was disappointed with KTOS, but you win some and you lose some. So welcome everybody. I'll get started in just a moment. Just give everybody a chance to sign in. Typically allow 4 or 5 minutes past the hour. So sit back, relax, and we'll give everyone a chance to check in. So we still have people actively checking in. Welcome to the webinar. If you're just checking in, I'll start in just a few moments. All right, I'll give this another 60 seconds or so, and then we can get started. So the market is a dynamic and fluid marketplace. It throws you a lot of looks. Sometimes you need to make a lot of decisions, but if you're watching it too closely and you're making too many decisions, you find that 1 minute you want to buy it, next minute you want to sell it. It creates a lot of confusion. So the best thing is to just step back and watch how things close relative to the high and low. To my mind, I kind of look at how the bars stack up, and there needs to be some aesthetic to what we're seeing here. And I'll go through all of that in this session. Okay, guys, welcome to the third installment of my 4-day live trading event, where I show you, in real time, what I'm looking at, how I evaluate risk reward opportunities, and how I'm looking for bigger moves in the market to overcome all of the inevitable losers. So I started, getting in, KTOS at $26. It ran to 33, and today got smacked, went down to $30. And we'll take a look at all of that, but try and keep everything in perspective. Um, my name again is Mark Shaw, I'm the pattern trader. If you haven't attended these, basically this is what every day I send out an email, with what I'm looking at on the chart, and then the setup. In this case, it's a buy stop. They're typically stop orders because I like to require the market to confirm what I'm looking at. So even though I see the setup, I want to see the momentum run into the price, and let the market do all the work. And this way I don't have to spend hours and hours in front of the computer watching some magic crossover, some Bollinger Band. I just look at what I call clean charts. You can see there are no indicators on this chart. There's no volume. I just look at a picture and try and make a risk reward relationship out of that picture. And I start buying and accumulating the pound New Zealand in the low 190s, 190, 197. I then add it to it, and that trade is now starting to kind of turn around in the marketplace. So just again, what I'm trying to do in these sessions is give you an example of my process, how I kind of look at things, and then when the market throws me curves, how I kind of react to those curves. Now we've been talking all this week about pound New Zealand, and it's just, for the last month it's looked ugly. I did one of these live sessions about a month ago, and pound New Zealand was basically coming and forming this double bottom, and I said at that time we were likely going to have a turnaround, but that I didn't see that it was going to be really quick because of the robust nature of the move lower. So the markets have a cadence, they have a dance, and this is what I do all day long. I kind of create a visualization process, how these bars should stack up, what makes sense, and what doesn't, in terms of how the markets move. And by and large, sorry, I'm just trying to find my paint tools here. There they are. So, I know this is very nuanced, and I can't expect you to figure it out all at once, but, to my mind, when a market comes straight down like that, it doesn't just turn the corner and go straight up. I always talk to my members about this concept of spacing, of building away from one wall. So in this case, a down wall, and then you kind of have to build away, in order for it to go in the other direction. But what gives us the indication is a preceding chart pattern. So everyone says, well, you can't pick the tops or bottoms in the market, and when the market's doing this, you really can't. But after a while, the market either follows through or it doesn't. And if it doesn't, and it forms a shape, so this is looks just like a W or a double bottom. So you bounce off the one low, you retest that low. When you come back, you kind of create this neckline, which is simply a line that is drawn through the pattern. And when the line starts dancing, or the prices start dancing above the neckline, that effectively confirms what you're looking at. So up until this point, prices had kind of looked like they were bouncing, and then kind of just trailed off and didn't come over the neckline, then it wouldn't have confirmed that pattern. Now, very often I kind of just have images in my head, and I start getting in these things way before they start confirming. I started buying this pound New Zealand, all the way back here and on the dip here and wherever I could, because I really had a firm belief based on the evaluation of the daily and the weekly charts that we were turning around, and this actually is in a stealth long-term bull market. In 2016, we hit a low of around 165. and now we're at 193. So over the last 5-6 years, we have gone higher, albeit it's been in fits and starts. But I have a feeling that this is going to be one of those starts which could carry this to an all-time new high. So I like to, get in low and get out high. So buy low and sell high. It's the old saying. And to my mind, the charts put you in the direction. There's no way to read all the information and discern everything and, read the, the Economic Times or the Financial Times or listen to the BBC. The market tells you when it's ready to go. So I look at a combination of patterns, in this case, a double bottom, and then a series of, what I call price action that puts me in the direction. So here you have what I call a key reversal, where you make a new low and you close at the high. And you can see that these bars actually point in the direction the market wants to go. Now, I don't look at all key reversals in a vacuum. Yesterday, we were staring, a key reversal in the face, where yesterday's session had made a new high. And then by the time we started talking, it was sitting on the low of the day. And I said, I would not fire at that. I would not regard that, as a sell reversal, because this to me is the guiding pattern. So, I think very often, traders sit in front of their screen, they're looking at a 15-minute time frame and it's arbitrary. I'll go to a 15-minute, and this would have showed you a very clear double top head and shoulders on a 15-minute chart yesterday. And if you were trading that and you were looking at patterns, you probably would have got short. But it was only by understanding, the long term, in this case 6 months, but I understand the weekly chart, that you primarily want to be faced, in the upward direction, because this is going higher based on what I call a governing price pattern. So when you put on something like this is going to govern or dictate prices going into days, weeks, months, and possibly years from now. So, even if we get here, and now it's not just a sell. This is still the governing pattern. If, even if we do one of these, this is an opportunity to buy it. And so once you kind of understand which pattern is actually dictating the price trajectory, then you want to just get in sync with that move. And the way I get in sync is with what I call a key reversal or an inside day bar. I call these insurance day bars because you can see this was another key reversal where, I think when we were talking, on this day, I said, put your buy stop here and your sell stop there. This is going to be a risk, and that's going to be a reward. And you can see that you would have gotten executed. You're now in the market, and now let's see what happens. But to my mind, I use a combination of patterns and price action. So you can see another key reversal here, another small or inside day bar there, and a key reversal there. So you could have taken all of those signals to put you in the direction that this is going. But it all starts with understanding the preceding pattern. Now, sometimes patterns can take place, 3 months prior or 3 years, and they'll be guiding the price action, in that particular instrument. I mean, in fact, if we go to the weekly chart of pound New Zealand, I always like to put on enough time. You can never go wrong looking at history. It's just like anything else. If you don't understand history, you're bound to repeat it. That kind of parable. So this is the long-term chart of the pound New Zealand. And all the way back in late 2016, 2017, if you were my member, I was yelling from the mountaintops to anybody who would listen to me that this was a huge buying opportunity. Again, we have a low, bounce off the low, retest the low. And when you came through that 180 neckline, that was really the confirmation. Then you also had this rounding bottom, and you can see that neckline, which is around 180, that was old resistance. It became new support. So there was the double bottom at the 180 support area, and here was another bottom. And you can see, for last 3 weeks, remember this is a weekly bar, even 4 weeks, we've had this coil where you have these inside bars, these narrow range bars where they just kind of cluster together. And then, what I look at this coil is that this is a compression. It's like, suppression of energy. I always make the analogy, picture placing your hand on top of a beach ball and trying to push it further and further underwater. And you push, 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 and then you let your hand off the beach ball. What happens? It just uncorks. All the pressure releases. And that's what I look at these inside bars. So, to my mind, this was the indication right here, where you saw this double low right in this area, where you saw this double bottom. So I was looking, at this stealth bull trend, if you will. So the market has, stealthily been going higher. I mean, in fits and starts. But, at every one of these major lows, you could have made a major amount of money. And I was in this move. I had a buy stop. This was one night during the height of, this was a Sunday night at the height of the pandemic. I had a buy stop at 211.87. Turned out this thing went to 218. But by the end of the week, it was, back to 2. So I took like several thousand pips out of that trade on several pairs and made just a bucket full of money on that trade. And I think we're going to have another one. So, this one should be really a doozy once it gets going. So I think this is one of the best risk rewards. I haven't really been talking a lot about the currency market because to my mind, I like to just focus. I'm like a dog with a bone. It's like once I get it, I just, wrestle with it, and that's all I focus on. So it's like instead of being a kid in a candy store and trying to trade this crossover and that currency and get this, what I like to do is find a high value target, a high value setup where I understand what I'm looking at in the recent time frame and the not so recent and in the far distant. And so collectively, this builds a picture. And so when I see this, I start getting very excited and I start loading up. Backing up the money truck. And now my whole feeling is that I want to be in this thing for a month, 2 months, 3 months. I was in this trade for 13 months. So I will sit in a trade for as long as it will have me. And I think this is, going to this is going to lay out the welcome mat for a while. So I've been showing you since the earlier in the week what my positions are. I make no bones about it, win or lose. And let me just scale this up. So I've got about over 300K in open profits just sitting in these positions. I haven't changed them since we started talking earlier in the week. So, the British, and I'll go to the 15-minute chart. And when I was looking at it yesterday on Pound New Zealand, it had a very clear, like head and shoulders. And I would have gotten out of this position a million times. So here are my Pound New Zealand. I got in at 190.36, 192.17, 191.05. And collectively, I'm making 55, so 76. So just like over 100K in the pound versus New Zealand dollar. And then I'm also in the pound yen, and I've got a slice of the gold market, which I've told you that I've been bearish on for quite some time. So this is, what, I'm looking for. And I'll do another of these webinar series in a month, and hopefully I'm still going to be in this pound New Zealand, and it'll be at, 197 or 201. So I just look for these trades and then sit in them. And then if, something starts giving me, a look like KTOS, like the thing's going to end, then, that tells me that it's going to end, and I just bail out. So this is, the one high value, currency trade that I'm looking at. The other trade we started talking about was these yen trades, which, I think that are at an inflection point. I'm long this pound yen, as I showed you. And, we're right at this resistance around this 149 area. I think will be the first level of resistance, and we'll get a look-see. And this is where, a little bit of a conflict comes in for me. And the way that conflict resolves is just how the market speaks to me. So in the meantime, I'm going with the momentum. I'm kind of a nervous long, but I am long nonetheless. as are, our elite members that I advise to get long around the 145 area. So we've got almost 300 pips profit in this thing. So, the thing is, so this has been in a well-established downtrend. And then within this downtrend, you kind of had this rounding bottom, which is now starting to, get taken out. So you kind of had this rounding bottom. And you can see that that's starting to, go the other way. So, we've kind of busted out already. So, I was kind of wondering if this is going to be a paradigm shift where, that we found a bottom, we have all these lows, and now this is going to be just a huge base, to go this way. Or, this was just going to eventually, run into the knife and go back in the direction of, the major trend. So right now, this is a long-term downtrend, but it is certainly starting to show every sign that it is breaking out. You can see that we've cut through, some of these resistance lines are arbitrary, so you kind of have this symmetrical triangle that it broke out of. And so this is really starting to look like a paradigm shift where we're going from one direction to the other. And, you have a series of underlying patterns. And frankly, I was, a little bit on the fence as to which pattern was guiding this thing, the long-term downtrend and, this double top right here, or are we starting to make a series of, this would be a double bottom with an inverted head and shoulders. And now we're certainly looking like we're coming to this first neckline. So we're trading right at this confirmation where either you're going to fake out here or this is going to be your confirmation. And it's starting to feel like this is the real deal. This is, you can see how slow and orderly, this ascent has been. It hasn't gotten out of hand. It's starting to get, you can see the bars, the volatility starting to grow. And, the way I usually hop out of a trend is where, you get extreme volatility, after a good move. But this looks, very orderly. I mean, you are bumping up against a resistance. I have my take profit on this pound yen trade at about 149.11, which is right in this area here. And, that may be just the wrong place because, I might not get out of it before it goes back down. Or if I get out of it, it's probably before it, it goes much higher. So, you're at this huge resistance level right now. But, the more you bang on this, glass ceiling, the more likely you're to bust through here. So there is significant, resistance, and there's likely to be a lot of turbulence, in this neighborhood here. And so, like I said, I'm a pretty nervous long because I am long, but, you have the first set of resistance coming in probably about 153. You're at this resistance right now, about this 149. That's why I put the take profit about 149.11. So that'll be the first level. So between here and here, is going to be, probably a lot of exploration. But the more it kind of just hangs around here without selling off, it just suggests that we're starting to, turn this ship around. But again, there could be a trap in here where the market gives you a false look. But this looks, very orderly, where it's just been, a very orderly breakout. So, I've been long these pound pairs, and certainly pound New Zealand looks like it's going much higher. So I think pound yen, I think with Brexit, now out of the equation, the pound is cut loose and looks strong against all of the major currencies, especially the US dollar. So I talked about this yesterday where you've got a giant, base building here. And I would say, the bigger the base, the more into space. So this has just been building a multi-year, looks like the stock of Lyft, although Lyft didn't display such great. So you kind of look like this huge base. And if we start taking out this, there's just a huge upside, which I think the dollar is in a multi-year downtrend. And so over time, I expect all of these currencies to go stronger against the dollar. But certainly the British pound, where you have the same look as the pound yen. So what I like about this, and it's the same as the pound Swiss that we talked about yesterday, where you kind of break a level and it creates a trap. So this is called a bear trap, where the bears chase these stops that were under these key levels. They put their stop, their sell stop here. You get a bit of action, and before you know it, it's in your face grace. And that's a trap. And crude oil did this. So these trap plays, when they kind of get going against you, this is what you see. Where if you don't get out, it's just a million miles in the other direction. And that's basically what we're seeing. And again, this is a very controlled and orderly, uptrend. You can see we've just been hugging this uptrend line in a very controlled fashion, very orderly. And now we're approaching a major level of resistance, which is a major level of support on the dollar index. So I imagine we'll hang out here for a while, but probably not too long before that area is going to be kicked in, and that's what we're looking at. So the pound is just going from strength to strength, and it's strong against every major currency pair. So the British pound is right now probably the strongest currency on the board, and it's probably, with the weight of Brexit, all of the concerns out of the way. And again, this is the unbelievable implications of price action. So I'm sure around this area, when there was a lot of uncertainty around Brexit, we were hearing that that Britain is done, that this gloom of uncertainty, and if it kind of cuts loose from the EU, there's just going to be all kind of hell to pay. And so that's what you hear in the punditry. But the markets are way ahead of the events. So we don't know for 3 months, 6 months, 9 months, why the market is turning. And then we suddenly say, oh, because of this, because the data becomes better, because this. So that's why you have to be ruthless and only look objectively. So if you're looking at forums and the BBC and listening to pundits and talking head, it just fills your mind, and then you can't you can't hear or see anything. You're emotional. You watch the thing go up and down, and now you can't sort the wheat from the chaff. But if you look at the pattern and then use the pattern trader toolkit, where here you have key reversal, makes a new low, close on the high, makes a new low, close on the high, makes a new low, close on the high. And after it did that each time, it was followed by new highs. And so this is how I kind of, if you didn't get in on the turn, you get in on the, on the ensuing price action and the trend. But if you understand what the pattern is that is directing traffic, then you know how to get into it. Just to make my point, so everybody's following very short-term charts, and I think this is the big reason why everybody's losing. So this is, a weekly chart of the pound New Zealand. This is a daily chart, so you can start seeing and getting some clarity, some kind of visual, some kind of cadence. I mean, yes, there was all kinds of nonsense in here, but you're starting to see. But if you kind of circle back here and go into a short-term time frame, then you're all fucked up. Right here, if I saw this on, any chart, daily chart, this is, would have been a perfect selling opportunity. You had your double top, you had your head and shoulders, and, it was like go to town. Here's your neckline, and then you got trapped underneath there. So that looked like, at that time when I was watching the intraday chart on the pound New Zealand, I was saying, looks like it, could come off here. But, I kept my eye on the prize, and that's why you got to be just ruthlessly objective. So look, it looks like we have another double top here. Looks like we have another double top, it cut through the neckline, and, this should, now go lower. That's what should happen. But if we look at the, long term, at some point, expect that this will kick in and go back in the direction as directed by the pattern. So you can see we have a long-term uptrend line, you know, maybe we come all the way back down to here before we go back again. But I don't, you know, if you watch this 15-minute, now you're like a bouncing ball. It's, you know, 1 minute you're going long, the next minute you're going short. And look, if that's your thing where you're trying to, you know, poke 7 pips here and 15 pips there, you know, go for it. But, you know, I like to just sit in something and let it work for me. You know, in the long run, being in and out of trades, I showed you that you're paying 2 to 3 pips on the spread. And if you're in and out 5 times a day and you're trading a normal lot, you know, that's $150 a day times 25 days is $3,750 that you've got to overcome just in the spread. So that's why day trading, and that's why most currency traders are losing, because they're playing for very short-term objectives and you cannot beat the spread. So Peter says, I've switched over all my time frames from hourly to daily. So Peter, I think that will slow things down. And then that's also for your mind. It will, you know, slow it down, calm it down. So when we're watching these gyrations on a 15-minute chart, you know, it's like I'm getting a heart attack. I'm long all these positions and I'm seeing this double top head and shoulders and I'm thinking to myself, you know, should I be bailing? Should I be, you know, taking partial profits? And, you know, now I'm trying to make 1,000 different decisions where if I just look at it, you know, at the end of the day, you know, then, you know, that'll give me a, you know, a decision. So, you know, yesterday it closed right on the low of the day and we look like a key reversal. And, you know, if I looked at that in a vacuum, I'd say, well, you know, I got to bail. But to me, you know, I'm just keeping my eye on the prize. And this is what, you know, I'm looking at. So sometimes, you know, you break out and you get a retest back to the, you know, the neckline. You know, you could still get one of these. And that still may be coming. But, you know, I think if I, you know, talk to you guys 3 weeks from now, we're going to be somewhere up there. I don't know how it's going to get there. It may do this or it just may do that. But either way, you know, I'll just add on any kind of breaks. You know, it gives me a break to the retest. You know, I'll just buy it down there. Because again, you know, playing the devil's advocate, and this is what I do. I do all kinds of visualization. So I always try and take the other side of what I'm looking at. I'm going, okay, I have a huge position. I'm making, you know, nice bank right now. You know, let me play devil's advocate and say, okay, should I get out here? And then the reason is, if I should get out, then the same thing is I should, you know, be willing to sell it short here, or, you know, sell it. And so if I got short here, you know, would I feel comfortable? Could I see like a clear path? You know, could I see it cut through all of these prices? Could I see prices doing that? And the answer is really no. I mean, you know, usually there's a pattern preceding, you know, some kind of fall. So here you had this head and shoulders, and then you could make the case that prices would fall. But, you know, I can't see that prices going in this trajectory, they're just going to do that. So I play with this all, you know, all the time. I, you know, draw these scenarios in my brain. I play, you know, devil's advocate and, you know, look for all the ways why I'm wrong. So sometimes I get very uncomfortable when I just feel like this is just crystal clear. And I go, well, if I'm seeing it, everybody's seeing it, and then the market doesn't work that way. And then I, you know, do all of these games in my head and I go, it can't be that easy. And, you know, that's the problem with trading. You know, it's like, you know, we've seen our, you know, our mothers and fathers go to work, you know, work a 12-hour day. You know, I see a little pattern with a reversal, stick my buy order in and go and play tennis all day, you know, make 300 grand. You know, there's like something wrong with that, you know, and that's, you know, a function of our societal conditioning that, you know, things can't be that easy. But, you know, it really is. If you dial it down to the most simplistic elements, it's pattern, price action, and then let it just go. Don't play with it. Don't look at it every 15 minutes. And look at that 15-minute chart where you see a double top head and shoulders and say, I got to get out of this thing. Because yesterday I saw that and I'm going, you know, damn, should I peel back here? And I said, no, I'm just sticking to my guns. So Ari says trading is 90% psychology and 10% trading. Yeah, I always make the analogy between diet and exercise. So, you can kill yourself, exercising 8 hours a day, but if you're feasting on donuts and pizza, the chickens are going to come home to roost. I don't care how much you're exercising. So that's why. I mean, look, the markets can either go, down or up, and then so why is everybody losing? It should be so simple, and yet because in here is where it gets very difficult, where it goes up and down every 4 seconds. You see the double tops, you see this, you see patterns, you see price. You're watching it. You're watching your equity go up now. Now you're elated. You're seeing, several $100 or $7,000 and now you're losing, and now you're saying, I don't want to, should I get out? Now it's coming back and you're, great, I'm back to even. Now I'm losing even more, and now I'm going to bail out. And then it goes on and makes a new high. So how many times has that happened to you guys? So yeah, but if you keep it simple and understand why you got in, I always talk about, knowing the cards that you're holding, understanding. So because this is what happens, the market for, most of the time is doing this. And then, 30% of the time it's doing that. It's like most of the time it's doing this, and then it goes like that, and then it goes back into a funk. And it's in the funks that you lose all your money. You lose your mind and you lose your money. But if you know what you're looking for and you have an objective, then, now I'm in this trade. It can come back to this neckline, retest it. I'm perfectly prepared for that. And then on the retest, if it goes, then, I'll just buy more. So Cello says, you're very funny, keeps us awake. So yeah, I feel like I'm part entertainer here and part magician and part, money manager and part trader. So, that's why, I really resisted getting into, this gig where I was advising. So yesterday I talked about going long pound Swiss. I think this is one of the best trades. I think this is going to be another short squeeze where this thing could go up very quickly. Where something stops going down. So when something stops doing one thing, it goes the other way really quickly. So this is another bear trap, just like the pound. We've had this long consolidation, and now you've just started to break above this 122. And I think you could go very quickly here. So I talked about a bunch of stocks, including Lyft. We've got this 1, 2, 3, 4, 5-day inside bar, kind of setup here. And, I had some options, expiring tomorrow. So I actually just peeled them off here because I'm just seeing something that we may be at a tricky place in the market. So you kind of see that, we're just at this, bit of this symmetrical triangle right at the top. That's a bit of a neutral triangle. And, we may be ready to come down here. This, sometimes when you see something at the beginning of a pattern, so you made a new high, you close at the low, and you haven't been able to break through here. And so I don't know. I think that long term, I think that, if this did come off, I would look to buy it. But it's in this congestion zone, and I think, we're going to get an answer one way or another tomorrow. This is going to break below this range or above this range. And I expected after this reversal to see some follow through, and we made a new high by about 10 cents, and then we closed on the low. So we've got this inside, bar, and I think we're just hanging out here. You can see that on the weekly, there's some resistance here. And so it just may just take time to consolidate this, just like pound New Zealand, where you get to an area and you just need the benefit of more time. So I haven't lost my bullishness, but, I'm also perfectly aware that we could just consolidate here. So to my mind, this is the prevailing pattern, just like pound New Zealand. So when it broke above $40, to me, this said that this is going to be a green light to the upside. And then you can see we have this congestion, this inside bar. So you have these on the daily, the weekly, or the monthly. And you can see we just haven't been able, but this is a normal or a natural resistance zone. So you can see this is, been an area where, the market has tackled before. We might have to kind of come back to the breakout area before we lift off again. And I would look at any kind of break above that. So I'm going to watch this range very carefully. I'm long-term bullish. If you've got a finger on the trigger and you can't, withstand their stomach, $3-5 downside, you may want to bail and, get out here or just put a buy stop. I had a buy stop last night. I sent out to my elites at 58.35, and I think the high today was 58.32. So that's the beauty of a buy stop, where you require the market to confirm what you're looking at. So the market didn't confirm, even though I thought the setup was there, the market didn't go above my buy stop, so I wasn't put in the market. So, it settled back today, and no harm, no foul. I'll look at something else. So I kind of told you about this funky looking. Well, let me go to the indexes here, because we did recover today, but this is where, again, not all key reversals are created equal. So first off, you can see that on the weekly, we have this key reversal. So tomorrow will be the last day of the week. And I'm kind of feeling that this is going to be closer to the low than the high. This is going to be the first weekly reversal that we've seen. You can see that, we're getting tighter and tighter. We've had this very tight uptrend, and you can see we just hit the top of that, and conversely, we've had this, very tight thing. So I think at the very least, a very minimum, we should see a retracement there. But, it could work out to be, something more. But I think we're probably likely to see a retracement. So this is what the weekly looks like. Now the daily looks a little bit different, where you could be, getting more excited because now when this closes, it puts 2 bars in the same place. So this is just really 1 bar. Where you can see that we recovered today. We went close, we went, to the lows, and then, closed, much, closer to the high. But I think that that's a bit of a trap. It's kind of like KTOS. And, I kind of should have seen it. I guess I lost my objectivity with KTOS, where you kind of have this key reversal here, and now this looks like another reversal today, and now it's a tug of war. So you say, well, this is a reversal, so it kind of points in the direction of the trend. But I think that there's resistance here. I think that this was, kind of a complacency where the market always kind of comes back. And I don't know, by the way, lift close and KTO, I'm just getting the feeling that we could start coming off. And, I told you that I look at this kind of contra indicator. This is a UVXY. And this is a terrible investment because this is, again, counter to the market. So if the market goes up, this goes down. So again, this is kind of like, Lyft and a few other things, the pound New Zealand, where you can see in this horizon where you had these guys close right on the low, but there was just no more downside pressure. You could see there was 3 things there, right along this ledge with this support line. And then you had this little inside bar here, this narrow range bar. It looks innocuous, but those things, usually precede, a change in direction. And I actually bought this thing. I bought it at 1066, and I blew it out right up here and made a nice, 40% move in just about a day and a half. And I'm starting to feel that we could be in the same kind of situation where, and we'll know it real quick, if tomorrow we don't make a new low and we just start going up, you'll know that this is going to reverse. It means if this starts going higher, the stock market will go lower. So I bought a bunch of UVXY on the close just because it actually didn't make a new low today. So you kind of have these two guys right here. And again, I'm trying to do this visualization that if you start taking off tomorrow, that you could get this burst, because you've got this huge area where it kind of feels like a lot of pressure, that beach ball effect, where you've got this area here where you could have some movement. And the market's been going up so much now that I just felt, look, it was just a shot. I started looking at the price action of a lot of things and started to feel I'm just going to take, I've got a bunch of things long, and so I just want to create a hedge. And so I bought this UVXY right on the close as a hedge. And so I think the low was like 925. And my expectation, if we start making a new low, then I'm wrong. The market will make a new high and game over. So, this is a great risk reward where I can literally, risk about 10 cents, to make, 7,000%. So that's how I looked at this thing. I'm not going to stick around very long. If this, starts making new lows, I'll get out, and I'll risk like, whatever today's low was. Today's low was, I don't expect, if I'm right, to see today's low. So today's low was 919. So this is 1.5 times the volatility. So whatever volatility you have, this is magnifies it by, 1.5 times. And you can see you get these quick bursts where, if the market goes down, you can make 40, 50%, just in 2-3 days before it kind of goes back in the trend. And so, the next burst may be, more impactful than the last one. So that's what I did. I just took a hedge. I may be right. I may be wrong. I don't know. I'm just trying to share with you my process, where sometimes you see these sneaky little setups where, the market, looks like it makes a couple lows in a row and it holds. It doesn't make a new low. So you can see that today, we closed on the low, but we didn't go and make a new low over yesterday. So you've got the sneaky looking, bottom, and these things, they look benign, but when they turn very quickly. And so you could just put a buy stop above here at, what was today's high? 982. So if and so this is a cheap instrument. You could, get something for $9.83. Buy a fistful, and if the market goes down, you get one of these 40% moves in 2 or 3 days. So Mustafa says, what is UVXY? It's a volatility index, and it's 1.5 times the volatility. So you can see, by and large, this has been a terrible investment because the market's been straight up, and so this thing goes straight down. It's an inverse correlation to the stock market. So if you're thinking the stock market could sell off, then you would buy this. But you don't want to overstay your welcome. I'm just looking for a quick burst, and maybe the next burst is above these highs. So in which case, I would go from $9 to $15. That's I can't do the math, but it's a big return, 60% return in what could be a few days. So it's like buying an option, really. So, but I'm kind of looking at this as an indicator on the overall market. So when this thing's going down, the market's going up. But, today, again, I think it's a complacency factor where everybody's so used to the market bouncing, and today we went down, closed toward the high of the day. So, you're used to this all this time, but I think you're getting closer to this, point where, we're at a resistance. So it looks like kind of ascending, broadening pattern here, actually, now that I'm looking at it. So, I saw this in the pound Australian not too long ago, and you can see that if this actually is correct, that we should have a move to at least down to there. And if this does break it here, we'll have a move right back to the beginning of the pattern. And I'll show you that on the pound Australian in a moment. So we call this an ascending broadening because basically it's ascending, and this also begins narrow and it widens at the top. So gold looks like this too. And so gold, I told you, looks like in, a little bit more than the mid-range here. We talked about gold being about here, and I expect gold to go to about here, which is to be about 1700, 1650 on gold. So this looks like it's, setting up this ascending, broadening pattern, and you can see, it's got all these resistance points right along this line. And so, I think that UVXY could be a, good bet, and I will add to it. If I took a pretty respectable size position, if it goes over 983 tomorrow, you can bet your boots that I'm gonna be adding to my position. So again, it's just a way of, if this starts coming off, of a way of taking advantage of a market that's moving lower. So this is the pound Australian. And I was seeing the same kind of shape up on the daily and the weekly. We have this ascending, broadening price pattern. And so, the NASDAQ right now is sitting about, in the middle of this. And if it's right, it'll come there. And if it is a bearish thing, it'll come all the way back to the beginning of the pattern. That's how that's the objective for this pattern. So if this breaks, the objective, the target objective is the beginning. So that's what an ascending, broadening price pattern looks like. We also saw it on the NASDAQ, where in the case of the NASDAQ, the long-term thing, it came back down to the long-term thing and then went on, made a new high. So that could be the case, but in the near term, it looks like the NASDAQ looks like it could pull back here. Now, one of the stocks I was looking at yesterday that I told you, Snowflake, this could be interesting. So I actually bought this today, I bought it on the exact low of the, actually blew out a little higher than this. So I bought about 1,000 shares at about 282. You can see at the time it was 289. I sold it for 291.5. So I made about 10 grand on this trade because it's in this funky pattern, here where I can't decide what it's going to do. We talked about it yesterday. I just thought it would kind of stop here. So I'm kind of undecided. And again, this is where it gets tricky in the best of things, and you just have to kind of defer to the market. So the question is this a double top? In which case the market should keep going lower, or, is this an area where you could go and make new highs? So, I think I shared with you, and let me just kind of go back and, if you weren't on yesterday, I made a trade a couple of years ago based on the observation of how these reverse triangles play out, where they're not really a topping pattern. So you have a double top, a head and shoulders. Those are reversal price patterns. A reverse triangle is kind of an intermediate neutral thing where you get a reversal, but then, it eventually goes and takes that out. So you can see that this drop from the apex of this thing, when it made a new, bottom. This is the NASDAQ back in 2015, and we know it was at 4,700 and now it's at 13,800. So we know this went on and made a considerably new high. And then when I saw the same pattern in Facebook, a couple of years ago, I just traded it the same way, where I saw the way it worked in the NASDAQ and had the same expectations where, when the stock broke out of that reverse triangle, formed a double bottom, I bought the stock, then I bought the options and made a boatload on the stocks and the options, about over $500,000. So this was the same kind of deal where I saw, I see this reverse triangle, and look, this is one of it. I mean, I don't know if this is the governing thing, or so we'll soon know. By tomorrow, if prices keep going this way, then this is the governing price pattern. On the other hand, if we make a new high, then I would expect this to go and make a new high. So you could probably straddle this with a buy stop on the upside and a, sell stop there, and whichever one hits is probably likely gonna win. So I was, intent on keeping this. If this had closed on the high, I would have kept it, but you can see it fell back, and I've got a little bit of a reticence about the market. So, I kind of think that we may go, back down. So I might have just got lucky today, but you can see it opened right on the low of the day. I kind of just felt like, that we were going to get some support in this area, and I just bought it. And it may have just been a lucky call in the end. But I bought this, and I bought the options too, and I made some money and I got out. So tomorrow we'll take a look at, Snowflake and see how it acted. And so if, it looks like the NASDAQ and Facebook, this thing would, go and make a new high above here. So, I'm going to be watching the price action there. So why don't I take some of your questions? So Mitchell says, do they have options on UVXY? It's a $9 stock, for Christ's sake. It is an option. No, it doesn't. It's a spot instrument, and so, but it's $9. You don't need an option on it, and this way you can kind of keep it. You don't have to have a time value on it. Randolph says, I trade on the daily. Your recommended time frame is the monthly. No, that is incorrect, Randolph. I toggle between the daily, the weekly, and the monthly. So I typically look at the weekly and the daily. Sometimes I reference the monthly just to see where I'm at in the whole thing. The monthly obviously takes a whole month to, for the bar to complete. So it's a little bit different. But no, every day I kind of start with a daily, and I kind of, look at that picture. And if I'm satisfied with that picture, I normally, I've done my homework. I know where it is within the weekly cadence and whatnot. But so I use the daily primarily, and then also the weekly. The monthly, is just part of the whole thing. Also to people are asking about EVFM. So about a week ago, I put this on my radar for our elite members at $4. Actually around $3.80. So I just found this. I do a lot of borrowing around, and I kind of thought this had a very interesting setup on the, I'll kind of poke back on the weekly too. So I just thought that this again looked like there was a lot of support, coming into this thing. I didn't know what this thing was. I don't know what the fundamentals are, just like KTOS or Lyft or anything like that. I just look at price patterns, and I kind of saw this has a very distinct one on the daily, but certainly on the weekly, you kind of have this Adam and Eve double bottom, and Adam is kind of a single, and this is a multiple. But this thing looks like it has a bottom under it, and these little caps, these small caps have been running. So you can see this thing broke through the neckline right around where I was recommending it, right there to our elite members. So if you were on my elite list, you would have been in this stock with a nice 25% return. So this looks like it could at least go here and possibly much higher. So this looks like a nice little gem. And today we had a bit of an inside bar, so you could trade it the same way. You require the market to confirm what you're looking at. So here was, this double bottom. And then it kind of came back here. And now, it went above this $3 area, this neckline. And, you can see it's starting to get a little bit more volatile. So when it starts getting volatile, that's when I start getting, so you kind of have this, inside bar. So, if you want to put a buy stop above the high, and then typically I would put it, put my stop loss very close to the low. So if this hits the high, I would want it to keep going. If it kind of comes back and goes through unchanged, you could start going the other way. So you could, set this up with a very nice risk reward and, see if this is one of these numbers where, it takes off and you get a quick double out of it. So I just thought this was a fun little thing. I started recommending it around the $4 area, right in here to those on my elite member list. And, it's, Mustafa says, I'm long on silver. I see it going down and I get nervous. Do I just stick to the bullish pattern? Well, what is the, I should know this, but so this is the 20-year Treasury bond. What's happening is the yields are going higher. This is what's scaring the hell out of the gold market. That's why gold's going down. Interest rates are going up. So this is the 20-year. I don't know what the 10-year is. The 10-year is almost at 130. So yields are going up. Interest rates are going up. So this is an inverse relationship also. When prices go down, it means interest rates are going up. So you can see that prices have started to go down in these treasuries, which means interest rates are going higher. And this eventually is going to start competing with stock market returns. It's, people have been crowding into the stock market because they've been getting 0% returns on treasuries. Now, all of a sudden, treasuries are yielding about, 1.3, 1.5. And people say, well, I don't need to take this kind of risk. I'll just go and park my stuff and get 1.5. And that's why the stock market could take a big hiding. If not here, I mean, if yields get to 150, you'll see, some serious dislocation in the stock market. So we're on our way there. So this is what's happening. And this is what, certainly is spooking the gold market. So you see this nice double top on the weekly in these treasuries. This tells you inflation's on the way. But gold doesn't like to compete with interest rates because, gold offers you no return. Whereas, if you park your assets in, risk-free, treasuries and get, 2%, you'll do that. So that's why gold is plummeting. I shouldn't say why. I never look for reasons why. It just is. And it looks like it's going to keep doing that. So you have this kind of inside bar here. And, I don't usually like selling inside bars, on the lows, but I think that this is going to go lower. I'm short. And, we've talked about this ascending, broadening price pattern on gold the whole week. I said it's been going lower the whole week, and it's been going lower the whole week. And I expect it will close on the low. So you see, this is just what looks like in a small form in the NASDAQ, what we saw in the pound versus Australian. So I certainly expect it to come back to this lower area around the 1650. And then we're either going to do that or we're going to come back down to that. So, but at the very least, I do expect another move lower. Now, silver, is hanging out. It's stronger than gold, but, it could be subject to the same gravitational pull. Certainly when we see, reversals like this, the market doesn't overcome them very quickly. Makes a new high, close on the low. So I've talked about this. You've got reversals here. You've got a double bottom here. So you're kind of in a, silver is a little bit more of a difficult case. You have a bit of reversal going on here. This is the weekly. So this is, more impactful. And, frankly, the metals look pretty bad on the monthly. So this is why I toggle between these time frames. So it's going to be interesting to see where silver closes this month relative to the high and low. So to my mind, this still looks like just a big bad bear market, where we've had, a nice fun ride, but, you could see that we have the double top, type of thing. And then, basically we just came to the neckline. We have this descending triangle and it broke out, but you can see that all we've really done is kind of come up to the breakout area. And now it looks like it kind of wants to go back down into, back into the funk again. So we're in the middle of the month. It's going to be very interesting to see where this thing closes relative to the high and low. And that's why I wait for the close. So right now, it looks bearish, but, if by the end of the month, prices are up here, it's going to look like a whole different deal, but, if it ends up down there, then that's going to look pretty ugly. So that's why I look at closes. Now, that's why it's difficult to trade the monthly, because we have to wait the entire month, but it does give you a picture. But, this is kind of what I'm talking about, where volatility starts expanding. So I like to see an orderly move. So you can see here, well, this did actually start getting pretty out of control, all the way up here. But, it's just a slow build. And to my mind, the more something builds and then rests and hangs out, like lift, it's gone up, it's hanging out, it may sell off a little bit, but that, is a more orderly thing, where all of a sudden, you go from, very small to just out of control. All of these weekly bars have been, you've just had nonstop volatility for like 6 months, where, prices are just going up and down. And that just, suggests, a lot of uncertainty, extreme speculation, emotionalism. And if I'm looking to go long this, I'm saying, is this sustainable? Do I see this thing continuing? With, it being volatile right at the beginning of something, let's say we see this thing going to 150 bucks, so I don't know. We'll see. So right now, you can see it's starting to, get a little bit heavy up here after this, that Reddit crowd ran, silver, try to get silver in a short squeeze, but silver is not like a stock. You can't short squeeze it. Not a, so you can see we've got some reversals here. It looks heavy. So Mustafa, I don't know. I think that this should hold up better than gold, but I just think that you could dance around in a range for a while. Not quite sure here. So sometimes things just stand out very clear, and if they don't, then I just avoid that instrument. I just move on. So I look at gold and I look at silver, and I see something very clearly in gold, and I'm kind of confused in silver, so I don't fuck with it. I just move on. I look at 500 different instruments a day, and I go up and down my chart, and I very quickly look at something, and it's either trending, and I want to get in that direction of that trend, or it's turning, and I want to, take advantage of that. So, this looks like doing nothing. It's at the top of a trend. I like this thing long term, but it looks like there's a lot of resistance. So I just move on. If something doesn't stand and yell at me, I don't do anything. Whereas, pound New Zealand, I wouldn't do anything here. So I just go up and down these charts looking for, risk reward opportunities. So, if the yen is going to continue, you kind of have an inside bar here in the euro yen. You could put a buy stop here with your sell stop there, try and get in the direction of the trend. I'm again a little bit mixed. So we talked about the euro yen, and yesterday it was much closer to the low of the weekly range, and now it's in the middle. So it's two different shapes. So right now this still looks like it's going higher. But we'll see by the end of the week. And again, there's about a 130 is where the big resistance is on the monthly, and anything above that, this thing's going to start turning around and start going, through these resistance areas. Annette, our team will let you know how to sign up to our program. Also, my book last night should give you a lot of things. Again, it was available for any price you want to pay. I'll put that link back in here tonight. So Tim says, I want to put a warning to you folks on the VIX. I put a load on the VIX over last year, waiting for the next big plummet. It never happened. I've been killed by the swap fees, and it's now down more than. So like I said, the VIX has been a terrible investment because the stock market has been going straight up, which means this thing goes straight. Well, And this is a very short-term instrument, right? This is just to take advantage of the next downturn. And like I said, you could be in this thing 3-4 days and make 50%. So this is not something that you want to hang around in for a long time. This is not a long-term thing, right? You can see they have these just little bursts where this was $10, it went to 15 in 3 days. You know, here was whatever, 15 went to 22. So you get these little bursts, and you know, you don't want to overstay your welcome. So Shabu says yes. For those of you interested in silver but don't want the volatility, there's an ETF out there, SLV, trading around $25 in the marketplace. So that's one way to to hedge your bets. So let me just see. There was one other play I made that I was quite proud of, because I got caught in the short squeeze and beyond meat, and I stayed the course. And 2 days ago I put on these put options in BYND, and I was quite proud of this trade. I bought these things for about $2.50, and I blew them out today for $12.35. I made a gain of 494% in 3 days, and just under $50,000. So, I don't lose on every trade, but you can see when I do win, it pays for the party. It pays for a lot of losing trades. So that was just in 3 days on BYND, and I'm still short the stock. So, I got caught right in this short squeeze. I was going to surgery that day, and let me just try and put some more time on this. Well, you can't see the whole thing, so I'm going to just go to the weekly. So again, today you had a key reversal, but I would not, again, just shoot at key reversals in a vacuum. You have to understand, what is the prevailing, chart pattern or trend. And in this, it's not so easy. I mean, it's been a very volatile stock. I think we've got news coming out next week. And so this is why when you see the weekly, it kind of looks clear, whereas you look at today, you might be a little bit ambivalent. And so this is why, I look at the, bigger time frames. Let me kind of just blow this up a little bit. I don't know how clear this comes out, on the visuals here. It's a little bit faint, but I think you can see enough of it. So, I was looking at this head and shoulders in this time frame, and this head and shoulders in that time frame. And so this is kind of, the devil. It's like kind of with the euro yen, like which is now the governing price pattern, where, I see these patterns on top, but, you might also make the case, hey, isn't this a double bottom? So now if that's a bottom, then over time, we should see this. And so this is where, it gets into a bit of a cockfight, and you kind of have to make your mind up. And I still, so to my mind, how I select which is the governing price pattern is that if this is a bottom, then, we should see prices go consistent with a bottoming activity, right? Where you shouldn't kind of make a high and then make a lower high and lower low. Now, sometimes you can retest the neckline and still go up, and yes, I mean, look, at sometimes you can't be perfect, and, you're going to get it wrong a whole bunch of times. But, I just kind of look at this thing and I say, okay, which is the governing pattern? And, to my mind, this is kind of an intermediate thing where, so I just chose a side, and I was wrong. I mean, I got short right here, and, I got in one of this GameStop frenzy short squeezes. And luckily I had enough in my account, and I just didn't put a stop. First off, I didn't envisage this kind of scenario. I had a heart attack when my friend told me it went to 218 intraday. But then you can see the ensuing price action thereafter. You've got this little coil here, and next week you have earnings coming out. So sometimes I'll bet, on earnings calls. I'll put on an option play, like 5 minutes before the market closes, right before the earnings calls, based on what I think, the setup is going to be. And, or you could just put a sell stop under this week's low. And, if it breaks out of this coil, it's, likely to keep going. So anyhow, I just, felt that, Beyond Meat is going to go down long term. I also feel, whenever something comes to one area and tests it so many times, as this did around the 113, that if a market's really good, it wouldn't have given me that many opportunities, to get in this thing, to have something that's going to sustain. And so I just feel that it's going to come back and revisit that shelf, that area, 113. I feel like we're going to come here, and frankly, I feel like we're going to go right back there. And I've been wrong thus far, but let's see how it all ends up. So right now I'm short the stock, and then earlier this week, and typically these options are so expensive, but these options were really cheap, which I was that's why I took them. I always look at these options. I've been looking at next week's options because I want to short into earnings, but they're too expensive. And I'll show you what I mean in a minute. So again, consistent with all those long-term patterns, I just feel you had the double top here, you had the head and shoulders, and then you had the short squeeze. But this to me tells me that it's basically all over. That when you have this kind of reversal, makes a new high and it closed on the low, to me that points in the direction that this thing is going to go. Now it's not going to happen all at once, but we're starting to see what I think looks like a funky double top here. And we broke a little bit under the neckline today, and then we broke but I think that this key reversal is not going to sustain, and it's likely that you'll see this tomorrow. So what happened was, again, you have a shelf here where you hit this level so many times, and then the market started creeping up, and then it just gapped higher. You can see this little slash to the left here is where the market opened, and you can see this is where it closed the day before. So it opened about $6 higher. And I said, I don't believe that this is going to, sustain this gap. And so right about here, where I think the high was 178 or something. Not quite sure what that high was. I started buying the 175 puts for about $2.50. And you can see it went straight down to about 161 today. So, those puts are worth about 14 bucks, and I got out for 12.50, and made about 50K on that little drop. So, again, it's that Wayne Gretzky kind of thing. It's like, not looking at where the puck is, but trying to anticipate where the puck is going to be. And I still think that this thing is going to go lower. So if, you take out today's low, which is around 161, I think that you clean this out. Look, if you keep going higher, it's another story. But, if you have another attempt, underneath here, I think you're going to start feeling out this area around the 140 again. And next week, we really should know. The earnings will come out, I think, the 25th. And so, but here's what I'm talking about. So I got these options for $250. And I'm looking to, buy them for next week. So if you go the option series, even for, so there's only 1 day left on, the series expiring tomorrow. So let's see, the 165s are trading at, $4. So where did this thing close? It closed at, 167. So when you buy the 160, let's say the fives, and you have to pay $4, means that this thing has to go to 162. No, for 161, 165 minus $4 premium, it has to go to 161 just for you to break even. So I'm saying to myself, it's trade close at 167. Now I only start making money under 161, and I've only got 24 hours to do that. So that's kind of an insane bet. It's not enough of a risk reward. When I buy an option for $1 or $2, I want to see a 3-to-1 risk return. It turns out that I had what, 600% or 494% on that bet. And then you can see going into next week, it even gets worse. So it makes it really hard to, those actually were the calls. I was looking at the calls. So you can see the 165 calls for next week are $11, which means the break even is 165 minus 11 is 154. So this thing has to go down $13 just for me to start, getting in the money. So that's just too expensive. And you multiply this 1045 by 100 shares because that's what each option is. So I have to pay $1,100 for each call. And this thing has to go down $13 just for me to break even. And then, after that, that's when I start making money. And maybe it will. I'm looking for this thing to, go much lower. And so maybe that's a good bet. But, I like to buy things that are cheap, like I did this week. Buy something for $2.50 and it goes to 12. I don't want to pay $12 for something to make 12. So Kevin says, for which option, how do you determine the strike price and how much to pick? It really, Kevin, that's a bit of a subjective thing. It all begins with a vision of, where you think the stock is going to go and how fast. Because after all, you're making bets, for usually that week. So I blew out my BYND this morning because they were expiring tomorrow. And you can see that the stock opened lower, it went even lower. And I said, look, it may still go lower, but I only have, 24 hours and I'm making 500% of my money. That's plenty. I'm just going to get out. And I got out when the stock was around 165 and it closed at 167. So, it turns out, but tomorrow this thing could be down $6 and I could have made another, but, I'm not going to play that Russian roulette game. And forego 500% profit. So, I think I talked about it, that when, I saw this, high value risk reward setup, last week in Lyft, I not only bought the stock, I also bought the options. So when I saw this double bottom, which maybe UVXY is kind of looking like, where you get these two things at the low, and then, you kind of get something that lifts off from there. And so I started buying the stock right here, 44.86. And so when the stock was around $44.50, I started buying the $46 calls, expiring that week. So, it was like $1 out of the money and I paid $1. So this stock would have had to gone to 47, from 45 to 47, just for me to break even. And you can see that it actually went to 53. So I made $700 for every $100 that I paid for 7-to-1. And then I also bought the 47s. I thought they looked cheap because I thought that this was going to explode by virtue of the pattern, by virtue of the setup, by virtue of the bar. So when I see it all coming together and that I can see that there's going to be a move and it has to be quick, right? I needed it for that week. I was right about the trajectory of Lyft here. I said it was going to go higher. And you can see that in this time frame, it did nothing. So I would have lost on all of those options because it just didn't, even though, it went, 2 weeks later. So you have to be right and also right now when you're buying options. The thing I liked about Kratos was that it allowed me, to sit in that till March 19th. So I have, a long time just to sit in that thing. And I was making 3-to-1 on my money. And today I'm back to where I paid for it. So, that's just the way it goes with options, but I still have another month to hang out, but it looks pretty bad. So Sandra says, I did not receive the link. Is the book physical book or digital? I believe it's digital. If you don't get it, Sandra, then just message our support team. I'll put that in the chat box. So I'm going to wrap up pretty soon. I'll take 1 or 2 more questions. Support at thepatterntrader.com. So here, FT asks, with these retail stockbrokers, is it possible to short stocks? How are we going to, very often with my broker, I look at, so in order to short a stock, you have to borrow the stock. It has to be available. And if it's not, you just call up your broker and they get it from the clearinghouse. So very often, I put on my radar the stocks that I'm looking to short, and then I see if it's on my broker's list. If it's not, I have to give the broker a call and say, look, can you go get the stock for me? It's a 5-minute call, and then they put it on their list. One stock that I'm looking at is QuantumScape, and I'm kind of looking to short this also. QS is the ticker symbol. I think it had some earnings call or something came out that popped the thing higher. I was going to short into it today. I'm kind of pissed I didn't, because I just feel like this is going to come down. I feel like what I'm looking at in this thing is a head and shoulders. And so sometimes, we just get a rally, but I think that this is the dominating pattern, and we had a bit of a key reversal where you went higher, and by the end of the day, you closed closer to the high than the low. And so, I would be looking for, something like this. And then, I'm either going to short the stock or buy call option, put options, or what have you. But I'm looking to start getting, short. So I would short QS into a rally tomorrow. Again, I use these key reversals as my insurance day bar. The reason I call it insurance is because I feel like that's going to be my high. So let's say we get the elastic band effect tomorrow, where you kind of get a little higher opening, you get a little pullback, and then, I'd be looking for something like that. And so I'd kind of get in here, and I would look for my risk here. So very little risk for maybe a lot of reward. So this is what I do all the time. I just look for risk-reward relationships that I can understand. And I lose a ton, but as you can see on BYND, I made 50 grand in 3 days on a bet. And so if I lose 5 grand here and 7 grand there, it just, it is what it is. But to me, it always starts with a picture. So this is kind of a picture that I can understand. So I looked at this as a false move. And it's a gift. To me, these things are just gifts. When you get a little bit, so you can see, this is not a bottom to me. That's just a shelf where you get so many pokes at the one level and it just comes off here. To me, it's going to come back down. So I'll just quickly look at the option series for QuantumScape into next week. So it's trading at, let's say, it's already down $2 tonight. So you can see it closed at 64. It's already down $2. So next week's options, let's see what it looks like. So it's trading at, call it $62. And so Kevin asks, what series? So it just depends on what kind of move I'm looking at. I would be looking for a pretty quick move, but again, it has to happen by the end of next week. This has to be, down at 52 or, what have you. So if I buy, see, it's pretty expensive. It's very expensive. Now, by the time Monday rolls around, perhaps it'll get less expensive, but if price, keeps going down, then, so you can see that the 58s are, trading for 360, which means the break even, you have to take 58 minus the 360, which is the premium you're paying. And so your break even is 54.50. So you have to say that it has to be under 54.50 by the end of the week. And so even if it goes to 50, that means I could make 1 to 1. And so if I'm looking at an option bet, I want to steal. I want something that I can pay $2 for and get out for 8 or 6. I want a 3-to-1 risk reward. Now, this could happen. This freaking thing could just crater, 15 bucks in a week, and you could have your 3-to-1 risk reward. Sometimes I'll just go to the chart, see what the chart looks like on the option series. You have to go really short because there's, not a lot of time on each series. And you can see that this thing is starting to show that it's percolating here, that there's some traction, but it's been a straight downtrend. So, I wouldn't do that. I'd probably just rather short the stock. So when I'm trading options, I'm looking for a steal. I'm looking to, buy something for 1 and sell it for 4 or 7, as I did with Lyft. So BB says, how do you define an inside bar? So basically, it's just a bar that rests. So once I kind of define that I see a pattern, or, so I see this is a double top and you have this key reversal. So this is an inside bar. You can see how the range from high to low in this bar sits within the range of the high and low of the previous bar. So literally, this is an inside bar. And this to me is just a coil. It's just like before it spring loads in the direction that this pattern was directing you. So when I see these things, I just put, my sell stop under the low here. So you can see this thing, opened a little hair above the low, and then you would have just automatically been put into this trade. So that's an inside bar. So, you can see that you have inside bars all the time. So here's like a, kind of effectively a 3-bar inside day coil. And so you have this coiling of energy, and, up to then the energy was going higher. So it uncoiled higher out of that coil. And now, with Lyft, you have like a 4-day coil, 5 days. We've had 3 5 days. So now this is going to uncoil in one direction or another. So you can see that for the last 5 days, we've just had an inside. All of those 5 days have been inside the range of that 6th trading day. So the more this thing coils, the more it's going to unload one way or another when it does. But since I'm looking to go long, I mean, I would, be careful of this thing. So, we could come down and, retest the breakout area. I would be very thankful to start buying this thing back at, 52 bucks again. Right in the, so maybe it comes back to this trend line. I would love to see that. I would load up. So I think that's, going to do it for today. Yeah, I think I'm going to live. So Daniel says, do you have to have a $25,000 minimum in an account to short? So, I don't know what the restrictions are in brokers. I know that, my account is more. So I've never, I don't know. It may be, when you in the United States, when you do trades in and out, they characterize you as a pattern trader, no pun intended. And then you have to have a balance north of 25,000. So yes, in the U.S., that's probably the case. Mustafa, you are always welcome. So guys, as always, I appreciate if you want to put a comment in our review thing. Let me give you the link to my book again. And all the money goes to charity. It shows that it's expired. Sorry. Just give me one moment. So if you want to get my emails, then I'm going to just put this in the chat box. And then put in the subject line, just let's do this. So I'm just putting this, sorry, it's not allowing me to copy this. Sorry about this. Just put let's do this. So if you want my my daily trades, just send me an email, markshawzenelite@gmail.com, and with the subject line, let's do this. So somebody said, why don't you talk about Cato? So I was talking about all week, so it's just fair that I do that. So I've been following this stock, and it had a nasty, trading day. And when I look at it on the weekly, it's not looking so friendly. You have this major key reversal, made a new high, closing on the low. We'll see how it does next, tomorrow, which will define what this bar looks like for the week. But I don't like to see these, obviously. I've been long the options. I still have another month to hang out. They'll announce earnings next week, but this is a nasty trading bar. So this is what started to spook me, that maybe the market is going to start turning here. So I started bailing on some of my options, and if you're long the stock, you could probably start just getting out. I started getting into 30, and so you're basically at a break even. And so this is starting to look not so friendly, where this is rolling around and potentially could look very toppy. So this is a stock that's ran from $5 to $33, and perhaps I was asking too much of it. I mean, it had a really bullish price pattern, but this is why you have to be prepared to challenge yourself. So this is starting to look like this. If it comes down into this area, then it's going to look like that. So I just started peeling out of some of my stocks. So again, I wasn't trying to evade that, Leo. I just, was talking about a lot of things that are on my mind. I watch 500 stocks and commodities, and I got a million things kind of going on in my mind. So I'm sorry, I didn't mean to intentionally overlook it. So yeah, price action, not so good. Just gap down today, close on the low, and does not look so bueno anymore. So you can see that, this is the upward trend line. If we pull back to 29 and it holds, I'll look at it, next week. There's going to be an earnings announcement 22nd or 25th next week. And I'll kind of see what the price action looks like. And, maybe I'll reload. But I started actually pairing some of my options. I got out of half of my positions today, and I had 300% profit. And you can see just one day can take it all back. That's the thing with options trading. So it works for you and can take it away very quickly. So you have to know what you're doing. All right, so Keith says, another awesome webinar. Thanks, Mark. You're welcome, Keith. George says, thank you again. Well worth listening to all your thoughts. I'm reading your book with great interest. Cheers. So again, yeah, if you want my trades every day, my thoughts every day, then sign up to the Elite. We'll have one of our team members talk to you before you do. You don't just sign up to it arbitrarily. You know everything that you're getting into, all the moving parts, and you get to talk with one of our team members before you make that commitment. So Ed says, I think I'll pass on the options trading for the time being. That's probably a good thought, Ed. It's not for the faint of heart. So Patty says, another informative webinar. Thank you for your insights. You're welcome, Patty. So thanks again, guys. I'll see you back tomorrow for the last installment. Appreciate your time, and please let me know your thoughts. It kind of lets me know, if I'm, just making nonsense or you're starting to understand things. I know this is a lot to digest this in 3 days, but that's the thing. If you get my emails every day and you see the charts, you see what my thinking is, and also it's not about the winning, because to my mind, I lose. As I told my son, you learn more from your losses than your wins. And so when I look back at my daily journal, my elite, I can look back and see what I did at certain junctures where sometimes things look very similar, and it's like a living archive. So even if I lost, it will afford me the opportunity to look at that and not do that again. So this is always a fluid learning process and experience. And again, what I try and do is have more money in my checking account at the end of the year than I was at the beginning. And I'm not looking at everything on an hour to hour, day to day. You can see I've been parked in this pound New Zealand for weeks now. My oldest trade in pound New Zealand was back in the 8th. What are we, the 18th? So I've been watching this thing go up and down for 10 days, mainly going sideways. And so, but I've got several $100,000 now just parked in that, trading account just from sitting in these trades. So hopefully it's not for everybody. I understand it's not everybody's cup of tea, but what I'm looking for is to be a consistently profitable trader over time. And there can be entire periods, days, weeks, months, where trades are going sideways, nothing's happening. You can see in this period here, KTOS or any instrument, where it just goes sideways for, this actually was for 5 months. And then you see a little double bottom here, and then all of a sudden, after 5 months, you make all of your money in 3 weeks. And that's just how it goes in trading. But I think we're such an instant gratification culture that, if we buy something and we have such excitement and whatever, now, I saw Mark doing all his razzle dazzle, making 50 grand in this trade and 100 grand in that trade, and now I'm losing. Now you think, he's a scam artist. I'm just going to go find the next shiny object. And that's what still happens. So again, I appreciate, your time, and please let me know your comments, good, bad, or indifferent. And then I'll know how to kind of make things clearer or better on the next webinar. So I'll see you tomorrow again, 4 p.m. Eastern Standard Time. So thanks again, guys.